David, why do you think succession's such a key issue, and what are some of the key things that you like to advise people on?
Succession is a key issue, Brendan, because global research and our experience in the Australian market says that more than 2 out of 3 wealth transitions invariably will fail. And that is a very alarming statistic, and we see that day to day, week to week in the work we do with families all around the country. And it's important if family unity and family harmony are important to the family. Now, in some cases, some parents don't want that. They really don't care. They let their kids go off on their own and do it. But the greater majority of Australian families want their families to stay together beyond the first generation, into the second and hopefully the third and fourth generation. And that's a very difficult thing to do. So if you're talking about the agricultural sector, we're aware that 90% of Australian farmers are owned by families. And if you then assume that most of them want to have that harmony and unity, then it's important they face up to the issue of succession. And our work says most people avoid it, they deflect it, and they ignore it. It's in the too hard basket. Now, that is not sustainable to then achieve what they want.
Yeah. Brendan, transition can be seamless if it's done properly. You know, the transition between my parents and my generation, it was just absolutely seamless, and it was planned and it worked really well. That's of course we're a much smaller business then. But my belief is that if you do it properly and you put the work into it, you can have a seamless transition from one generation to the other. And that's what we all should aspire to, because keeping these family farms together is really critical, not only for the businesses but for the country.
I totally support Ross. He said put the work into it. Yeah. Most people in business, whether on the farm or in their factories, 99% of their time is spent on the family business and probably 1% on family. You've got to put the time and effort into the family as well as into the family business.
David, when you spoke, you said the family is more important than the dollars. I thought that was really, really important.
To most of us, Ross, it is. Unfortunately, there are some people that think it's all about the dollars, and yet when you get the opportunity to talk to the next generation, invariably it's not about the dollars for them. It's all the things that money can't buy. It's the support, the love, the guidance, the networking, creating opportunities that the younger generation want from their parents, not just the money.
I love the Brown Brothers story, 125 years, and I particularly enjoyed you saying your mother Patricia making the really hot cup of tea at 10:30 every morning, so your brothers and your father could sit around and have a conversation every day at the table around business and how it's all going. But when the next generation's coming through, how do you see that sort of playing out, Ross, and what are the challenges? Because I guess whilst you've had 125 years of success, you've still got many challenges in front of you.
Well, the secret of that family table was communication. Yeah. Had the stakeholders around the table, and you were talking about aspirations, you're talking about the family, you're talking about the business, and creating that environment where you have that open communication, that transparency of information flowing from one generation to the other. That's what you have to have if you're going to have a good transition and a good business. You know, that communication still is the cornerstone of a good business and succession planning.
So Caroline, what were some of the family cultures that you were brought up with that still may happen today?
I think that the biggest one for me was the family meeting, the annual family meeting that we had. And David, you spoke around how it's important to have family meetings, but it also has to have that social element as well. So every time we had our family meetings as kids, we'd go away to a complete neutral place. We'd go to a hotel or somewhere that nobody had been to before, and we always had external facilitators. We did things from trout fishing to orienteering to team building activities. There was always a business element to it. But I started going to these events when I was around 6 years of age. And at times I was expected to sit up at the table. I was expected to listen very diligently and answer any business questions that were thrown my way as well. So kind of got into that process from a very early age.
Some of the drawings I saw you doing didn't reflect much on the business.
It's amazing how much you can take in via osmosis, though.
But isn't it important that families have fun together? And I see too often families that just think it's about work, work, work. For successful work, for successful businesses, you need to do other things. And whether it be an annual event or a quarterly event, you've got to have fun together because it breaks down the barriers between all the family.
Totally, and I think it's a lot about respect as well, and having respect for every single family member, whether or not they work in the business, they're part of the business, or they have completely external activities that they partake in. It's about respecting each other for the decisions that they've made.
And if there's respect, if there's understanding, then there's a greater chance that the younger generation might come and ask that difficult question to their parents: what's really important to our family? What's really important to you? Where do you see the future? Because one day you're not going to be around. Now that's very difficult for a child to ask their parent unless there's a very close relationship, the respect, the love and the understanding that it's comfortable for us to talk about it. Because we all know it's very uncomfortable to talk about wealth. It's very uncomfortable to talk about succession. We've got to get beyond that.
So Carolyn, what are your goals? What do you see, the next phase? What's important to you?
I think for me, it's about our people, and it's about making sure the family culture that started with Dad's parents really continues to be one of the core elements of the business.
Yeah.
And as, I guess, less family members are involved in the management side of the business, it's making sure, from my perspective and my sister Catherine's perspective, that we continue the family sort of culture within the business. And I think that's what's going to take us to the next level. I think being Generation 4, we don't want to be the ones to, screw up the business. We just want to take it to the next level and really be the gatekeepers of the brand and the family culture for the next generations to come.
So you see yourself as a future custodian of the
Totally.
business,
Yes.
as compared to an owner that might decide to do something else with the business.
Definitely. I see myself as a family member. At this stage, I don't see myself as an owner as such. But I think it's important to know that you can be part of a family business without having to be the CEO.
And Ross, some of the keys as part of your journey over time, you said innovation and also having a mission, and I thought those things were really good. I mean, how did you come up with that, innovation and the mission statement and that journey?
Yeah, well, one of our missions is leadership. Now, if you're going to lead in an industry, you actually have to have innovation as your cornerstone. You can't have one without the other. And we're just fortunate that we've got an innovative culture that's actually run through generations. And keeping that innovation working requires permission. Staff need to be said, you've got to be innovative, you've got to think outside the box, you've got to bring new skills and knowledge to the business continuously. And if you actually want to be a leader, you actually spend a lot of time looking forward, not in the rear vision mirror. And having that vision about leadership actually gives you a lot of drive, a lot of determination. And you can't lead without innovation in this world. And we just love innovation in products because it's actually changed our business compared to our competitors.
Some of those qualities you mentioned, Ross, I think they're inherent in a lot of families, a lot of family businesses, and there's the very reason why family businesses are more successful than other organisations if they get it right.
Yeah.
And the biggest threat to family businesses today is the inability, the failure to deal with the succession of what happens when, not if, what happens when I'm not around. And that is the biggest single threat to most family businesses in Australia today.
I think for our family, we'd always talked a lot about succession planning, and we'd always had external help with succession planning, but it wasn't until Dad's brother Peter passed away about 12 years ago where we actually saw those things having to be put in place. And I think, as David said, it's so important to have those things in place ready to go from the start, I guess.
And families are not good at documenting because, we don't need to put it down in writing, it's all in here. Well, I've learnt the palest of ink is better than the distant memory. Because when, sadly, your uncle passed away, if you didn't have things in writing, then different family members have different views. He meant this, no he didn't, he meant this, etc., etc. And that's where the clashes start, the difference of opinions start. And families are all in transition. Every day, every week, every month, every year. We're all moving in different directions necessarily. And to stay on that one page is a challenging thing to do. And it comes back to some of the essentials you've heard this morning. People have to put in play and they will succeed.
David, your comment that succession is an ongoing process,
not an event.
Not an event is so important because we all get a bit excited. We have a moment that gets crystallised by some event. You go and get all the work done about wills and structures, and then you put it in the drawer, and then you get on with your business.
Correct.
Whereas,
That's not it.
that's an event.
Correct.
But the process is actually continuous.
And that's why we have an argument with lawyers, Ross, that just having the will is only the start of a process. It's talking to your children, understanding their needs and their requirements and their objectives as well. So it's an ongoing process. Totally agree with you.
And David, you were part of a big family business that obviously went its own way. What was your key learning, do you think? Well, what's the key takeaway if you had to give one piece of advice?
As you've heard from me repeatedly, the essential element of open, honest, transparent communication involving all family members, whether they're the oldest or the youngest, whether they're in the business or not in the business. Communication, but it's got to be facilitated with someone that's independent. It's got to be created in a safe and warm environment so everyone feels comfortable about saying, because in the end, I've got to understand my brother's or my sister-in-law's true feelings and thoughts. I've got to peel back the layers and not just deal with the superficial things in a family, but get to the nitty-gritty of what are their motivation, what are the real challenges, what's really important to each and every family member. And you don't get that with one meeting. You don't get it with one round table. You get it by constantly having those family sessions, family meetings where everyone has a say.
Primarily, investors don't want to inherit the tax history of an entity they're going to invest into. But investors also want to find a structure where they can actually have an ownership interest. That doesn't always work with something like a discretionary trust where no one has an ownership interest. And there is a difference between local and foreign investors. Foreign investors will typically have less of an understanding of trusts, for example, which are not typically well understood, particularly by US and Chinese investors. On the other hand, local investors will know about trusts, partnerships, and they're more comfortable investing into those structures. Typically go with a two-phase approach. The first phase is really understand what is my structure and why is it structured that way. The second phase would involve looking at what are the different options available to move that structure to something more investor ready. Phase beyond that would be implementation if necessary. A key thing in working with a transaction is to harness the knowledge that's been accumulated, in many cases, over 20 or 30 years with a local accountant. When you pair that knowledge with something like PwC's experience in a transaction, that's what leads to the best outcome for a client. So it's not about leaving the local accountant behind, it's about coming together to find the best solution for a client.
Those kinds of objectives can be met through lots of different structures, but in my experience, I think the best way of doing it is making sure that you've thought about it at a number of different levels. So when you're thinking about it from your family's point of view, it's probably best to hold the business assets through some form of discretionary trust. That provides you some benefits of asset protection as well as the benefits of succession planning. To provide the sort of investor ready piece, however, the next level down needs to be in the form of a company or other kind of structure that's better known to foreign investors. A trust is a legal fiction and can be very difficult for people that aren't used to the Australian legal system to get used to. So I would recommend that you then employ a system below that where the company is the one that's operating the business. And that enables you to have that two layers of asset protection and also then ensures that you've got that ability to share the benefits of the business across multiple members of the family. There's a lot of talk these days about farming businesses not having enough capital, but if your business has more than enough capital and more than you need to fund the current expansion that you're undertaking, then my recommendation is to make sure you take that off the table. Don't leave more money in the business than you actually need. So if you've met your banking covenants and there's surplus capital, find a way to get that out. Because if you leave it behind and the business has a downturn in the future, that excess capital is exposed. And if you had have moved it out earlier, you could have preserved it and protected your own personal wealth in a different way. So I would recommend moving it out by way of a dividend, putting it into some kind of other holding structure for your personal assets and using that to invest perhaps elsewhere, or just having it available on a term deposit so you can invest back into the business one day should you wish to do so. All of those decisions you need to make actively. Just leaving the money sitting inside the company or the business unit that you're using, it may be fine, but make sure you're doing that with an active management decision.
Yeah, so now 2017, we've got very, very buoyant investor appetite for agri funds, which has taken a long time to recover from those GFC drought MIS days. We were not able, I'm involved in a fund 5 years ago, we struggled to get any investor interest in a fund. Today we can try and raise capital and we can have it closed in a couple of days. We see the same thing in other property markets. We see REITs trading on the stock exchange, 3 years ago at pretty high yields. They have compressed significantly. And in a way that has helped the agri property fund market, where people are looking at this as an alternative. And, they're thinking, well, why would I invest in industrial at a 5% yield where I can look at, agri funds and earn 10%? And that has very much helped the growth in agri funds. The likes of Arrow Primary Infrastructure Fund, Rural Funds Group are two I know of that are strong performing funds, and their yields and cap rates have well and truly improved. I think, the big risk for agri-property and property markets in general is capital. At the moment, we've got a huge weight of capital wanting to buy assets, plus interest rates. I mean, interest rates at 4% make a lot of property investments very attractive. If we went back to the 2007 days of 8 or 9%, we're suddenly looking at things that, may not be able to pay interest, and, the investment proposition is very, very different. Yeah, so I think there's a lot of Australians investors who want to invest in agri, and really the choices are directly into an operating business. Think of it as a farm, and typically that is seen as pretty high risk, and most investors I know find that very, very difficult to get their head around. There are the service sectors, and they've been around, some of them, for many years. Think of the Graincorps, the Ridleys, who service the agri sector. And, that is, a long tried and tested way to invest. And the Australian stock market has many listed groups like that. Another alternative is to invest via property. So, you can own a farm but not have to take the farm risk type of thing. So the operating risk of, production, drought, prices that people don't want, it is not reflected in property. And so we find investors who like to own real estate and have a lease, which is a fixed amount, to operators who are prepared to take, the risk. So I think property for me brings another more stable, it's less risk, it's less risky. Obviously the returns are lower, and it's another avenue for investors to come in. And I think also people who like investing in property, the alternatives to office or industrial or retail, when people start looking at agri, can look very attractive on a return and a yield basis as well. Yeah, so I think most investors in Australia, and the Australian REIT market is world leading. So if you think of, companies like Westfield and the retail REIT that they created, that is a world leading company. Australian investors, in a way, tend to like getting a yield, which is a distribution or a dividend. So that sort of tends to lead to certain types of asset classes that can pay that. The more land components, such as grazing, beef, sheep, you're not going to be able to get an investment yield, much higher than 4 or 5%. Whereas certain other industrial style properties where you might have sheds on them, like chicken farms, or other infrastructure like trees, like almonds, where we can get yields sort of above that 7 or 8%. And that's probably where Australian investors have tended to focus.
For Australian food producers and food companies, I guess you could flip that around and say, what price do you put on brand Australia? The ability for us to trade a safe product, a clean product, a product that honours the promises that it wishes to make, is fundamental to our participation in the global food sector. So another way to think about the value of it is, what's the opportunity cost of not delivering on that promise if we can in market? What would somebody be willing to pay to know versus not know? Our proposition is that they would be willing to pay quite a lot for that, like any other luxury good or high-end differentiated product. There's a couple of things that they can start doing right now. The first thing is, and I've been saying this for a little while now, is whatever little secrets you have in your production system, whatever common industry knowledge there is, that when others learn of that, I'd be working pretty hard to get rid of those now. The world of information is not getting smaller, and people's ability to garner that information is not going away. In fact, anything is probably no truer than the opposite of that. People are getting more information and access to information, and frankly, consumers are demanding it. So whatever those little secrets are around the way that you do something, or the way that you take something away from that, or you add something to it, then I suggest that you reconsider those, because in a more transparent food world, those things are going to become known.